Hello, good evening, everyone. My name is Liao from Phillip Futures, and welcome to our webinar tonight on Palm Price Outlook 2022. Now, let me do a sound check. So please select yes if you can hear me loud and clear. So if you can hear me loud and clear, please select yes on your screen. Okay, if you can hear me, please select the yes button on your screen so that I know you can hear me. Okay, so yes, thank you. Thank you for the response. Okay, so before we start our webinar, just a quick disclaimer that whatever we share or discuss today is purely for educational and informative purpose only. We are not recommending any buy or sell recommendation to any futures product. Now, let me have a quick introduction to our company. So, Phillip Futures, we were incorporated on the 7th of October, 1995. So we've been in this line of business for over 25 years in Malaysia. We are a wholly owned subsidiary of Phillip Capital Holdings, where our mother company is based in Singapore, and our Malaysia headquarters is located in Kuala Lumpur. We have several branches around Malaysia in Penang, Melaka, Kuala Damansara, Johor Bahru, Kuching, Cebu, and Sabah. So we are a trading and clearing participant of Bursa Malaysia Derivatives Berhad and also a holder of Capital Market Services license to carry out futures broking business. So for the year of 2020, we've been awarded several prizes in Bursa Excellence Awards 2020. We were the first runner-up in the Best Overall, Best Retail, and Best Institutional Derivatives Trading Participant. As our mother company is based in Singapore, we have a very wide global network with offices in 15 different countries. As you can see here, we have offices in different continents, such as in the US, UK, and in Asia, we have China, Singapore, and so on. So with our global network, we offer a wide range of products from overseas exchanges, particularly exchanges in the US, Singapore, and of course, Malaysia. So with Phillip Futures, we do offer various types of futures products, such as index, metal, agricultural, energy, and lastly, interest rate futures. And for CFD, we do offer shares CFD from Bursa, New York Stock Exchange, and NASDAQ. So if you are interested to check out these products, feel free to contact us and our representatives. We'll be more than happy to be in touch with you. Okay, so why choose Phillip Futures? Firstly, we offer 24-hour support to our clients. If they are trading overseas market, they can call in to our dealing line to get some support during night trading hours. We also provide the latest market news and daily commentaries to our clients so that they get the latest news and make informed decisions. Next, of course, we provide wide range of product to cater different individuals to their trading strategy and objectives. Lastly, our clients can also consult with our representatives on products or market news if they wish to know more. So for those who are new to the futures market, we offer private coaching sessions to guide them on the basic knowledge in trading futures. Periodically, we will also hold some webinars to the public to educate them on the derivatives market. After you are equipped with necessary knowledge and skills, you can open an account with us. And all of these coaching sessions, webinars, as well as account opening are free of charge. So as mentioned just now, we will introduce futures and CFD trading, explain on product knowledge, charting system, as well as platform coaching in our private coaching session. Okay. Now I would like to make a short introduction of our speaker tonight. Dr. Sathia Varqa is the co-founder of Palm Oil Analytics, where the organization produces daily market price and data analysis based in Singapore to serve the global commodity market. Palm Oil Analytics publishes daily reports covering price assessments, analysis of key data, and market commentary. In addition, Dr. Sathia previously worked for S&P Global Platts, a division of S&P Global based in Singapore. And this year, he was appointed as advisor to the Malaysia Palm Oil Board Techno Economics Research Committee. Now, before I pass it on to Dr. Sathia, just a quick reminder that if you have any questions throughout the webinar, you can type in the chat box and we will answer your questions accordingly in the Q&A session at the end. Now, without further ado, let us welcome Dr. Sathia.
Thank you, Liao. Okay, can you see my screen without the next slide?
Yes, we can see it.
Okay, excellent. Got it. That's correct. Okay, so friends, let me just organize myself here. Okay, that's better. Okay, so where do I click? I should click here. Let me just okay. Dot control. Just one second. I'm just trying to move this thing away from here. Okay, that's better. Okay, so good evening, good afternoon, good morning, wherever you are joining from. Thank you, Liao. I'm very happy to be part of this webinar with a reputable brokerage, Phillip Futures, which is well established in the CPO market for many years with the global presence. So as the Chairman Liao introduced, my name is Sathia. We are publishers of palm price news and data on daily basis. And if you want to take a look at what we do every day, you can contact me or you can scan this QR image here, and we'll be happy to send you the newsletter on a free trial. We host over 30 years of historical cash prices on palm, on Lorix. We write on market commentary on daily basis. We analyze data, export data, import data, and analyze the fundamentals of what's happening in the market and offer price outlook. Okay, so here are all my coordinates. I'm active on the social media. If you're on LinkedIn, please connect with me. If you're on Twitter, please follow me. And if you're on WhatsApp, drop me a message. I'll be happy to include you in the broadcast list. So you can only see my screen, right? You cannot see the next slide. Okay, that's good. So the main question we want to try and answer today is that, will palm prices remain high in 2022? I think it's a very interesting question, but also very timely after seeing the bloodbath today, where prices descended to 2.5-month low on the February active month, and there is a month switch. Tomorrow, March 2022 will be the new active month contract from tomorrow, which closed at 4,262. So will the low be the new normal, or will March benchmark jump at the opening tomorrow? So that's the kind of question we have. So remember, just to recap quickly, what was the main price driver this year? Supply was the main problem. Supply from Malaysia, not Indonesia, although Malaysia is the second largest producer. Global market looks at Malaysian supply and demand because Malaysian supply and demand data and CPO futures on the benchmark on the Bursa Malaysia is the reference price, global reference price, which is used to discover the CPO futures, CPO cash, and all the other derivatives product, olein, stearin, and so on. So Malaysia had a severe shortage of workers, widely known, well reported, everybody knows that. So shortage of workers means you have fewer people to harvest, crop recovery is low, and therefore there is massive loss in CPO oil. Secondly, not widely known, but reported by MPOB and others, is the reduced planted area in Malaysia. So the land that is used for planting has shrunk by about 100,000 hectares. So very significant reduction, mainly in Peninsula, but also in Sabah. Reason being, Malaysia, like any developing countries, rapid urbanization means some of these oil palm planted area being sacrificed for development of townships, shop houses, residential houses, and so on. So this is very important to remember. That means we have lost this planted area forever. It's not going to come back again. Okay. Thirdly, decline in yields. Historically, Malaysian yields have been on a downtrend because of high number of mature trees, over 90%. So the yields have been declining over the years. So lower supply has made CPO prices to rise and stay sustained above 50% compared to last year and hit multiple record high prices just this year alone. Over in Indonesia, production been optimal, but there have been other problems like higher levy and taxes to fund their biodiesel program. So very high levy means global market has to look for CPO supplies from Malaysia. So that's why CPO supply is always tight in Malaysia. In fact, in November, some plantations bought imported from Indonesia because of the shortage. And secondly, in Indonesia, the moratorium on land expansion has expired, but that means the government is asking the industry to follow the new omnibus law, which basically says that there is an upper limit of 100,000 hectares per plantation expansion, but it doesn't give a cap on the new plantations allowed in a year. So that means the opportunity for expansion is greater in Indonesia than in Malaysia. Second sub point on that is that big producers, Golden Agri, Bumi Tama, First Resources, not all these big players have utilized all the land bank area. So they have land bank and only most are planted. So there is still balance of like 15%, which is the largest available for Golden Agri, for example, and 15% can run into few 100,000 hectares. So supply problem has caused prices to remain elevated, not only in palm, but also sunflower oil, canola, big problems, and soya bean oil. So how will prices go? Will prices continue to go down in December, Jan, Feb, March, or will this price go higher? Back again to 5,000 ringgit. Okay, let's try to see the fundamentals. So all these factors are important. I just want to stress because we always present in a short window of 20-30 minutes. So we cannot touch on all these issues, but I want to highlight that all these variables and others are important, they are interdependent, they are interlinked, they cannot be separated alone and studied by themselves. So this presentation is not some reductionist approach, but I just want to highlight that there are connections between all these, but I just want to highlight the main factors here, which is production. So I will say global production on major oils, Malaysian CPO production outlook, Indonesian production outlook. Weather outlook, not much comments there. Fertilizer cost, I just want to mention that it's no surprise that agri companies are expecting higher input cost in 2022. Okay, and how will that have an impact on palm production? What are the main points to remember? Palm discount to bean oil on the demand side, I just want to show you a chart. Trade policy is very important to look at two countries. Obviously, trade policies cover all the trading countries, but Indonesia and India are quite critical in the changes they announce. Whatever changes they announce will have a major impact on CPO prices on Bursa Malaysia in the immediate term, but also in the long term in terms of demand in India and exports to India and exports from Indonesia. Biodiesel, big story in Indonesia. What is going to happen there? I'll show you some charts and my expectations there. And also finally on sustainability, I just want to make the point right away now that just after the event in Glasgow, the major agri companies, about 10 big agri companies like Bunge, Cargill, Wilmar, Vitara, Louis Dreyfus, and so on, have signed an agreement to clean up their supply chain. What does that mean? All these companies have significant palm oil footprint from plantation, processing, trading to consumer product. So are we going to see higher premiums, and will that translate to higher food products and oleochemical products? Okay, so it's a very important area to watch. It does not have an impact on the CPO futures, but it will have an impact on the company's financials, on how they go about in cleaning up the supply chain that is consistent with limiting the global warming to 1.5 degrees Celsius as they have promised. So no details yet, but a space to watch. Okay. Let me also just say quickly about fertilizer cost. So fertilizer cost makes up about 40% of plantation cost per hectare. And plantation cost can range from 1,800 to 2,100 ringgit per hectare. Okay? So that is a significant cost that we are going to face going into 2022, not only in palm, but also in beans, in canola, in sunflower, and so on. That means critical management of fertilizer application will be crucial for plantations. And that means if fertilizer cost rises significantly, that smallholders are not able to afford in applying the fertilizer in the first and the second quarter of next year. That means we may not see the usual peak production that comes out in September, October, November in Indonesia, and in August, September, October in Malaysia. So we got to watch this space. Cost is high. Does it not mean that companies are immediately going to cut back, but it will be a major cost in biting the profit margins. So here are some numbers on global production estimate and projections. So the main point here is all oils 2020, 2021 to 2022 will see an increase except for canola. This is widely known, and that's why canola has been trading just surpassed 1,000 Canadian dollars on the ICE exchange. But the recovery is not at the full potential. That's the main point I want to make. It's not at the full potential. There is recovery, but not at the full potential. It's still struggling, and there are challenges ahead, which includes, number one, there is going to be a very tight carry forward from 2021 to 2022, very tight carry forward in all major oils. Secondly, we may face potentially adverse weather condition. We may face excessive rains in oil palm plantations in Malaysia and Indonesia, and we may face extreme drought, dryness in Canada, which will have an impact on canola production in marketing year 22-23. So that's just consideration. And if prices are very high, we may see higher output, farmers want to take advantage of the higher prices, but weather has to be favorable. In terms of palm, we do not expect any major weather disruptions to have adverse impact on output in the first quarter of next year. Okay, but on canola, still not sure, because there's going to be it's still not clear crops will be stressed or not, because remember, canola is a cool season crop. It grows particularly well on the prairies, where cool nights and hot days allow it to develop the unique fatty acid profile. Okay, so that's just a point I want to make. Recovery, but not at the full potential, but there are some risk involved. Okay, let's look at Malaysian production. So we think Malaysian production will recover in 2022 to about 19.1 to 19.2 million tons, or about 5% rise. This is based on, the first assumption is strong assumption, which is weather is going to be okay. There's not going to be a major weather disruption like we saw in the first quarter of this year. There's a lot of excessive rains, which caused localized flooding, disrupting harvesting work. The weak assumption is workers. So Malaysian government has announced, different numbers keep coming out. Are they ready to have boots on the ground? So that's the question. We don't know, 32,000, 30,000, 40,000. But if it's based on 32,000, as the government said, and according to the timetable, which means workers should be on the ground harvesting in May. So we can expect good crops coming out in May, June, and July. Will have a significant impact on increase in supply of CPO if these workers are hired and are on the ground. Thirdly, we assume that fertilizer management will be okay. There will not be significant cut in the application of fertilizer because of cost increase. Okay, so 2021 is over. We are expecting lowest production in 5 years. That is priced in. That party is over. We are now looking at 2022. Production will recover, but it will not be able to cover the losses from 2020 and 2021. So production will still be better, but will not fully recover to the pre-pandemic level. Okay, see, Malaysia has not been able to break out from the 20 million tons, and over in Indonesia we are expecting production to be better, poised for an increase by about 3%, which is lower than the usual annual increase of 4 to 7%. Again, this is based on the assumption that the weather, particularly in Kalimantan, does not face any major adverse conditions for yields and harvesting work. So Malaysia is trying to break out into 20 million tons. Indonesia is very likely to break into 50 million tons in 22 or year 2023. Okay. Okay, so looking at the demand side, so we look at demand of palm. Palm is the cheapest, most widely used edible oil, but does not mean it does not have a competitor. It does have a competitor, and bean oil is the nearest competitor, and the spread between palm to bean oil been very narrow at below $100, for 2 months now. Okay, so if it remains below $100, we will see lower exports in December. Remember, India imported double the amount of soybean oil in November compared to a year ago. Okay, because the palm price was not attractive to the Indian buyers who are price sensitive. Okay? So we got to observe this spread in the physical market. If it stays below $100, that means Malaysian exports is lower, production will tick higher. If it's higher, then the main thing is stocks. Stocks may go nearer and nearer to 2 million tons. So it's bearish for prices. It's bearish for prices. So with the price fall today, we have to see how the crude degummed soybean oil in Brazil is going to perform tonight Asia time. And I'm hearing that the prices are not going so well. It's going downhill because Brazil is expecting early and greater soybean harvest this year. Brazilian soybean harvest is usually in February, but this year they are running faster and the harvest is coming sooner, right? Harvest is coming sooner, and that means there's a lot of beans available. There's a lot of beans available, and today we will get the NOPA soybean crush for November and soybean oil stocks for United States. Both are expected to be higher. That means it's bearish on soybean oil. So soybean oil falls, depending how much it falls, we may see an improvement in the palm discount to bean oil. So I'm just this is looking at this graph is showing you the cash market. If you look at the futures, CPO third month versus soybean oil on CBOT, the picture will be slightly different because in the United States, more and more soybean oil is used in biodiesel. USDA December report shows about 40% of the soybean oil supply goes to biodiesel. Before it was like only 33%. So it doesn't make sense for us to look at that because one is going into biodiesel, most are going to biodiesel, the other is going into edible oils. Okay, trade policy, again on the demand side, levy and taxes are widely reported, and it is good for Malaysian CPO exporters because levy and taxes make up about 27 to 35% of the CPO reference price. So we will know the reference price. We should be able to calculate the reference price this Friday. And if you are on trial, if you want to know, you can just get in touch with me. We will let you know. We think it's going to come down by 1 notch, given the prices have come down. And the assessment is based on 20th to 21st every month. Okay, so you can see here in high taxes, particularly on CPO in Indonesia, which is currently at $375. CPQ is even higher, $420 levy and taxes for December shipment, and Olin is about $248. So high levy and taxes has really depressed CPO output. This green chart here, green bars here, year-on-year comparison. So this is here, I'm comparing November this year versus November last year. It's down, but Olin has done slightly better. Olin has done slightly better. So who has benefited from all these is Malaysia. Malaysian CPO exports are up 10% during the first 11 months of this year versus last year, but Indonesia is down 54%. So Malaysia has benefited from these hefty taxes in Indonesia. Indonesia has their own agenda to run the biodiesel program, which the government has committed to. So the dynamics on biodiesel in Indonesia is helping Malaysian CPO prices, but not necessarily Malaysian refiners, So if you are interested in knowing the levy and taxes, you can click on these hyperlinks here. Once you get the slide, you can then see the whole chart, which is on Palm Oil Analytics website. Okay, so second trade policy we have to look at. So in Indonesia is one, mainly to do with export and levies on subsidizing biodiesel. But in the case of India, the driver has really been food price inflation. Accelerating rise in food price inflation has made the government to reduce the base import tax, and this has changed about 5 times. So any upward revision So it's at base rate is at 0 now on crude palm oil. Any upward reversion will be bearish on CPO futures pricing. We do not think this will happen in the first quarter, but it can happen in the second quarter. It can happen. Indian government is a lot more responsive now to the changes in food prices. You can see this chart here. So the way to read this chart is, this is not 170, but just to read these layers here, the main point is that all oils, CPO, Olin, crude degummed bean oil, refined soybean oil, taxes, import taxes have been converging lower to lower levels, showing that the government is committed to controlling inflation. So another point to watch here, India import tax. Okay, just quickly on Indonesia oleochemicals. Indonesia has done very well this year when it comes to oleochemical domestic demand. It has really increased in the first 9 months to over 40%. But in the case of Malaysia, it has been a bit lower, because you must remember Malaysian population is smaller, Indonesia is much bigger scale. But this is an interesting space for an opportunity for Indonesian oleochemicals, which mainly covers glycerol, soap, fatty acid, fatty alcohol, and so on. So detergent and cleaning product usage has increased by about massively, which makes up about half of oleochemicals use, detergent and cleaning products. Okay, just on biodiesel very quickly, we do not think Malaysian biodiesel export will improve. 2020 will see another year of reduction in exports, for the 3 reasons highlighted here. This will not have a major impact on prices, but it will have an impact on Malaysian domestic biodiesel, how it's going to, can Malaysian biodiesel domestic mandates absorb the loss in exports? Okay, will it be able to absorb? I think the answer is partially yes, it's possible, but Malaysian domestic biodiesel have been having problems year after year. Ministers have changed, governments have changed, but there seems to be some lingering thin will to get this nationwide implementation of B20 on the table. Okay. Over in Indonesia, it's a much greater, bigger, solid story. Indonesia biodiesel use in 2021 is expected to reach 9.2 million kiloliters, up 8.8% from 2020, and the usage will increase further in 2022 to 9.6 million kiloliters under the B30. So that means we do not expect the government to upgrade blend rate to B40 next year. B40 might be further out. Pogo spread is wide. Production is there, but supply is very tight. So we think it will not happen this year. Okay, just a quick outlook. You can see the numbers here. When you get the slides, you can study the numbers. I've put all the numbers here. For production, Malaysian production expected to increase to 19.2 million tons. This is Jan to December. Indonesia CPO and CPKO at 54.5 million tons, an increase of 4.7%. Malaysian stocks are expected to finish at 1.97 million tons December, in about 2 weeks. But we will remain on a tight supply situation for 2022. So the tight supply will continue to be a theme in 2022 unless we see more and more batches of workers arriving from overseas in order to address the problem of crop losses. Okay, price outlook, last slide. CPO futures active month. So we are happy. We said this well in advance before the market came down today. So we think the prices will come down further to 4,200 on the benchmark month. by end of this year, but recover to trade higher in Jan and Feb, but not 5,000 ringgit. We do not expect the benchmark month to retest even 4,900. I think it's a bit too, we have come too far downhill to go back up that high. But prices will come lower again from Jan Feb higher, but lower again from end of March, as I said, with the increase in production. February production is always lower because of the shorter month, Chinese New Year holidays, but higher production from March will depress prices. And today March is already sitting at 4262, but we expect prices will come down lower in March next year. Olein offers should also be down from the current rate of 1195 to 990 or even 950 in March. Spot month premium, so the premium today is about 320 ringgit from the first month to the third month, but it was 600 ringgit just a few weeks ago. But this premium will narrow further. Premiums are wide because expectation of tight supply at the front month. That's why it's wide. But with the idea and the sentiments of improving supply in the short term, we should see a narrowing of the spread. Last point, food price inflation will see a slowdown. So this depends a lot on the interest rates that the Fed will be setting. Inflationary pressure is so high, the only way to slow down the increase in prices of commodity, iron ore, copper, coffee, sugar, is increase in the interest rate. That will send a clear signal for commodities to slow down the price increase. So with that, thank you very much. I'm happy to take any questions. And once again, here are my coordinates. This is what we do. Here is the QR code. Okay, I will stop my slide and pass it back to Liao. Thank you. If you're speaking, we cannot hear you. Okay, now we can see the slides.
Hello. Yeah. So thank you, Dr. Sathia, for the insightful sharing on the CPO outlook. Now, before we proceed for Q&A, let's do a quick poll. So the first question is, what do you think will be the average price for CPO futures active month contract in 2022? Yeah, so there are four options. Option A, between 3,000 ringgit to 3,500. Option B, between 3,500 to 4,000. Option C, between 4,000 to 4,500. And lastly, D, between 4,500 to 5,000. Okay, so seems like most of the audience think the price for next year would be in between 4,000 ringgit to 4,500 ringgit.
Very bullish. Very good.
Now, let's move on to the second question.
Okay.
Okay, so the second question is, What is your view on Malaysia CPO production for January until December 2022? So we have 4 options as well. Option A, between 18.5 to 18.75. So these are in million tons. And option B,
Yes.
between 18.75 million tons to 19. And option C, between 19 to 19.25. And lastly, option D, between 19.25 to 19.5.
Yep.
All right, seems like our audience thinks that the Malaysia CPO production for next year would be in between 18.75 to 19, option B. All right.
Interesting.
Okay.
Very low.
Right. Thank you for the response from the floor. Okay. All right. Now we have come to the Q&A session, and if you have any questions, you can post, type your questions to us, and we will answer your questions accordingly. Okay. Okay, so the first question we have is, how can retail intraday trader use this information and apply to their trade?
Very good question. You can hear me, Liao, huh? Can you hear me?
Oh, yes, we can hear you.
Okay, great. So do you want me to answer or wait for more questions?
I think we can answer this one first because we are still waiting for more questions.
Okay, can. So I mean, I'll just say briefly. Yeah, so that's a good question. How can retail intraday trader use all this information? So prices move because of few reasons. Main reasons are fundamental data. Fundamental is what I just presented: supply, demand, production, export, blah blah blah. Okay. Prices can also move because of technical reasons. This is the brokerage report that you see every day in the morning, right? The analysts will draw we call the resistance, the support, the regression, and so on. So that's technical. Prices can also move based on sentiments. People think, I think. Like today we saw panic selling, sentiments of bearishness. Boom, boom, boom. People sell. Okay. Then number 4, it depends on the story that you read and you hear. Okay. So these are some reasons. Not all the reasons are important. I'm not just saying fundamental, but prices will come back to correlate or to come back to match fundamentals. Okay, so what I presented today is fundamentals of supply and demand coming up from Malaysia on the 10th of every month from MPOB is crucial. It's very important for you to understand the outlook and the dynamics of the Malaysian palm supply and demand. And this data is available for free. You have to go to the MPOB website on the 10th of every month at 12:30 p.m. The data is released. Okay. Some of these data are well priced in. Okay, we know that, no surprise. But it also depends. Sometimes if there is a surprise number, right, then prices might move accordingly. Okay. So fundamentals are important. They are important for you to pay attention in order to undertake day trading, intraday trading. And if you want to be included in the broadcast, whenever data comes out, I send them out. You can send me a WhatsApp message. I'll be happy to include you. Okay, over Liao, over to you.
All right, thank you for the explanation. Okay, now second questions from the floor. Regarding La Nina, what should we expect for 2022? Should it be short or prolonged to March 2022?
Okay, we are in the midst of La Nina. Okay, La Nina, excessive wet conditions in the southern hemisphere. La Nina has a short-term impact on oil palm yields, not a long-term impact. The opposite, El Nino, has a prolonged effect on yields stretching to 1 or even 2 years, like we saw in 2016. Okay, so La Nina does not have a major long-term impact on production. There will be an impact, but not a long-term. It will be a short-lived one. Over to you, Liao.
Okay, thank you. Now the next question is, has the planted area peaked in Malaysia and Indonesia?
Okay, very good question. No, planted area has not peaked in Malaysia. So the previous government, I don't know which is the government, during the ministership of Teresa Kok in Malaysia, when she was the Ministry of Plantation Industry and Commodities, the cabinet decided to cap the expansion of oil palm planted area to 6.5 million hectares. Malaysian planted area is about 5.8 now, or 5.7, so it has not peaked. There is still land available for plantation for expansion. Okay, that's Malaysia. In the case of Indonesia, the last frontier, the last area in which expansion can take place is Kalimantan Barat, Kalimantan Selatan, and so on. There is still scope for expansion in Indonesia, particularly in the Kalimantan area. Said that the current government in Indonesia is very strong in upholding environmental rules. And the government has committed to putting limits, like I said earlier, according to the omnibus law, on the pace of expansion. It will increase, but the pace at which production will increase will slow down to about 3 or even 2% compared to 4 to 7% rapid growth over the last 5 years that we saw in Indonesia. I'm more optimistic that Indonesian production will surpass 50 million tons, and I'm a bit pessimistic on Malaysian CPO production exceeding 20 million tons in 2022 or even 2023. Okay.
Okay, right, thank you. Now the next question is, how can we adopt this CPO price trend to become oleochemical product?
Okay, I don't understand this question. Unless the questionnaire wants to resubmit, or let me take a guess. How can we adopt the CPO price trend? Oh, you mean how can you become a downstream player? I don't understand the question, so I will wait. If the person wants to resubmit, we can go to the next question if it's okay, Liao.
Okay, sure. Yes. If our audience, if you want to repose your question, yeah, you are welcome to do so. Okay. So now let's move on to the next question.
Yep.
Yeah, so the next question is a bit long. Regarding the persistent labor shortage, there was a news where some plantations are already using AI for harvesting. Will the practice be further exploited? It is known that the CPO output is expected to improve from March onwards, but if the usage of AI materialize, could this improvement be achieved sooner?
Okay, I'm not an expert on these, but I can tell you that the rate of mechanization in Malaysia, including AI, differs widely between plantations. Okay, so there is state-owned plantations, large private-owned plantations, estates, and smallholders. Okay, the rate of adoption is very, very different. The government of Malaysia, particularly the MPOB, has offered plenty of incentives for adoption of this technology, but not all plantations have tapped into it. I don't think they've tapped into it. AI usage is still in nascent, still in early stages. I do not think that the adoption of AI will have a significant increase in CPO output. But let me see this question again. Will the practice be further exploited? Difficult to say. If it's, you see, if there's a lot of machineries available, but the adoption rate is very, very low. The adoption rate is very low in Malaysia for many reasons. Will the practice be further exploited? I don't think this will have a major impact on output from March onwards. But if usage of AI materializes, could this improve? I just don't think so. I don't think so. So you must also remember that the infrastructure may not be ready in Malaysia for such a rapid upgrade in the adoption of artificial intelligence. There may be some plantations that might use it. Some plantations may use it, which has the necessary infrastructure in place, but not all. And most of the producers are small players, smallholders in Malaysia. That's all, Liao, on that question.
Right, thank you. So next question. What are the commodity? Yeah, so let's proceed to the next question. Okay, so what other commodity is palm oil price correlated with?
Okay, that's an easy one. So in the morning, when you look at prepare yourself for trading, so the main oils you should look at are soya bean oil on CBOT. How did it close last night? CBOT soya bean oil, first month, second month, keep an eye on that. Dalian, commodity exchange. Now the most active month are May and September. We will keep an eye on how palm oil and soya bean oil are trading, very important, at Asia trading hours, because China trades earlier than CPO futures opening. They start at 9 o'clock, they start at 10:30. Also look at Zhengzhou. I think I said it correctly. Rapeseed oil in China. Rapeseed oil is traded on Zhengzhou exchange. Keep an eye on that. Also, see how it's trading on that day. I do not think, I'm not sure. I think the 15 minutes data, delayed data is available. Dalian is available, 15 minutes delay. So you can know, you can roughly guess. You should also look at crude oil. Crude oil, not significant, but you must look at crude oil. Other oils to look at are rapeseed oil on Euronext. Euronext has got quite an active contract on Euronext. So soya bean oil on CBOT trades, tracking canola on ICE exchange, ICE exchange, the Canadian on Canadian exchange. So they kind of correlate. The morning spills over to CPO, connects to Dalian, and Zhengzhou exchange. So these are the main oils you must look at when trading. Okay, there's an arbitrage opportunity, they call it. Okay. Yep,
Okay.
done with one.
All right, thank you. So I think because due to time constraint, I think this will be our last two questions. Yeah, last two questions.
Okay, Ken, whatever, no problem. I'm here. Okay.
So the next question is.
Yeah, you're quite soft now. Yeah.
Oh,
I
yeah.
can
Can you hear
read
me?
the question. Yeah, I can see the question. Let me just save time and try and answer it straight away. So you want to comment on mass balance premium for PKO derivatives like fatty alcohol, premium skyrocketing? Yes, correct. This is very true. So two reasons for this. Number one is the United States government banned imports from SIMDA-B because of allegations of child labor or labor abuse. Okay, so they banned the imports of PKO, CPO, stearin, RBD, PKO from SIMDA-B. SIMDA-B is a significant supplier of sustainably produced PKO. So that means a significant chunk of the supply has been taken out of the market. So that saw a sharp increase in MB and SB, mass balance and segregated balance. Segregated balance premium is higher, $350 last week. Big jump from about 250. Okay, mass balance reached about $150, $200 also. So that's one reason. The other reason is there is a very strong demand for oleochemical players in the EU. Okay, remember the COVID situation is not completely under control in Europe. So there is a vast volume of PKO flowing to Europe. And when you have a supply shortage, the premium have been going up very markedly, very noticeably. That PKO became more expensive than crude coconut oil, which doesn't make sense. It was like that for about 3 weeks. It's now beginning to correct slowly. Just a small comment on crude coconut oil. We think copra production will improve in the Philippines, but there are risks. The main low-level risk is typhoons, intensive typhoons, which happens usually at the end of the year. So far, nothing has happened. If it doesn't happen, then we should see an increase in production of copra and coconut oil from the Philippines, which means we can already sense the crude coconut oil prices coming down from the peak of over $2,000 on CIF Rotterdam. So the outlook on PKO is that PKO prices will also be down. It's already down on CIF Rotterdam. It should come even lower as the premiums start dissipating. Okay, the premiums start thinning out. So those are the comments I will make on that for now. Okay, so then the last, I think there's another question. Is it okay, Liao, if I just read it?
Yes, sure. This will be our last question. Yeah.
Oh, last question. Okay. Aren't the consuming countries like India tied to long-term contracts? If so, why do we have such short-term price volatility? Good question. Second part to the question, are the major palm oil producers or refiners capable of hoarding, controlling their production like OPEC and managing market prices? No, they are not capable of hoarding. You can't hoard CPO. Then your FFB will shoot up, the price will fall. Okay. Are the consuming countries like India tied to long-term contract? No, there are not many long-term contracts. We still see a lot of spot month offers and bookings. Okay, so now we are in December. A lot of the bookings are done for AMJ, April, May, June, and these prices are negotiated based on today's price. So I will buy for April, May, June booking to be delivered in April, May, June 2022. So I wouldn't say many long-term, there's some long-term contracts, but there is a large chunk of buying that happens in Malaysia, but far more in Indonesia on spot term basis. Because in Indonesia, you have the levy and taxes, which is always unknown, and buyers have to bear this cost. That's why Indonesian offers are always short term. So we are December, the offers are for December, Jan. That's it. Sometimes CPO is only for December FOB. Unlike Olin, Malaysia, which is offered on for Jan, AMJ, July, August, JAS, and even OND. Okay, so not many long-term contracts. They are not tied to long-term contracts, and even if they are tied, that is nothing to do with the price volatility, because it is not significant in commanding the market price. It is not so significant in terms of the volume, but it's a good study to undertake, I would say. You have to look at how much India is buying, volume, metric ton, lots traded on the CPO futures benchmark, and then try and look at some studies on how does it correlate. Okay, how does it correlate? So on the second part, I will quickly say, no, I don't think they are capable of hoarding, controlling their production. It just, palm is not. You can control, you can stop palm kernel, but CPO you cannot, FFB you cannot. If you store FFB, the quality of the oil, free fatty acid will deteriorate. You have a lot of FFA, then the price will be low because the quality is down, right? So that just doesn't work. Same like pineapple, you cannot keep it very long. You have to process it on the same day. Okay, so hoarding will not work. What you can hoard, what you can keep is palm oil, which is edible oil. You can keep that. That you can store. And in fact, the Indian government have just few weeks ago made the regulations that supply, they should not be hoarding of palm oil, because many retailers, warehouses were hoarding. They were keeping and expecting the prices will shoot up and then they can sell and make a profit. So that's not allowed now. Okay, that's all. Any others?
All right, thank you for the explanation. I think there will be our final questions, due to time constraint. Okay. Right. So due to time constraint, that's all for our Q&A session. And now, if you like to open a futures account with us, you can scan the QR code here on the screen, and so you can trade futures product on our Phillip Nova trading platform on your desktop browser as well as on your smartphone. So with our platform, Phillip Nova, you will be able to receive trade notifications, check your trading history up to 7 days, and view the market news on the app. Or if you are keen to try our demo account first, feel free to scan the QR code here on this slide. You can have a look at the user interface, which has more than 90 technical indicators and market depth trading tool. So periodically, Phillip Futures will also carry out various promotions to our clients. Currently, we are having this Phillip Star Trader promotion campaign where our clients can stand a chance to win lucky draw prizes worth up to 50,000. If you are interested to know more, you can scan the QR code here as well on the slide. So before we wrap up today's session, if you still have any questions, please do not hesitate to be in touch with us. You can follow us on these social platforms by simply search Phillip Futures. So you can, or you can also drop us a message on Facebook or chat with us by using our website live chat. Okay, so here are the contact details for our headquarters and branches around Malaysia. You are welcome to contact the nearest branch to you, and we are more than happy to assist you. Okay, so that's all from us. We hereby thank you everyone for attending this webinar, and of course we appreciate Dr. Sathia for this wonderful sharing. So now I hope everyone has learned something new today, and we hope to see you guys in the future. Take care and stay safe. Thank you.
Bye. Thank you.